But I do appreciate y'all just for tapping in on this Sunday. It's a new week, new opportunity, right? Sunday, markets just opened. New week, new money on the floor. So, just understanding that we're in an environment right now where there's a lot of market manipulation. You got to be smart, you got to be wise with the positions that you're taking and the ways that you're, risking your money in these markets, right? So, one thing that I've learned to do just in this market environment to kind of help me with my consistency is just overall lower time frame trade setups. I might be wrong in the long-term directional bias at times, but when I could catch these smaller reactions, even like this quick little sell last week, I caught some more trades, but that's just one that stuck out to me. That's all I really need. Yeah, I'm not really in this long-term, swing trading mentality, especially when the markets can be manipulated at any moment. The whole reason for this crazy bullish rally primarily was because there's a ceasefire. Strait of Hormuz is open back up. And if you guys have been on my weekly outlooks, I've been really bearish for a while. I've been bearish, ever since we've been in this region. Took sales here. We've been bearish literally for, I mean, if we look at even this tool, it's been a while. It's been well over a month of just, us waking up, trying to find sell opportunities. And the last week or two, we've seen, a huge bullish rally dating back to the end of March. March 30th is when we put in this low, and then the market's just been bullish ever since. And I thought we could actually get a reaction in this area again because the first one wasn't, it didn't fill in much of this fair value gap. So I figured maybe we can come into this region again. And that's not what happened. The market, actually chose to break and make new all-time highs, right? So, now it's like, okay, are things looking better? Are things looking like they could, start making a turn for the best? And I always say, I've been saying it, all year pretty much. We were living in a highly manipulated market environment to where, even somebody like Donald Trump, he says a lot of things, but unfortunately, they may not last very long, right? Or, there's a lot of conflicting, sentiments bouncing around where the United States will say we got a deal and this is happening with the Strait of Hormuz, and then Iran comes out and says, yeah, that's all a lie. We haven't been in any communication. We're not talking about anything, and yeah, we straightened down the Strait of Hormuz again. So now, the question becomes is, are we going to continue bullish or are we going to, go bearish? And I would personally lean more towards the bear side of things, just from a technical perspective. When you're making all-time highs and you're in uncharted territory, there's a lot of profit taking that takes place just on a technical perspective, but also with the straits being closed again, with them not making any progress in terms of, negotiations. It's no telling specifically what's going to happen. If I had to guess, I'd say we're going to go bearish again this week until something else comes out that switches that bias. But this is what I want you guys to understand, and this is why I lean so heavily on lower time frame trading, is because you can be in a position and all it takes is a tweet these days to completely destroy your trade and blow your account or whatever the case may be, right? And you got to start putting yourself in a position to where you can capitalize on these smaller movements without exposing yourself too much in terms of risk, right? So again, I'm a big fan of lower time frame trading. And one trade that, just an example of one that I took last week was this one here, right? And this was one of the ugliest trades I've taken in years. Usually, everything I do is at least a 1 to 5. I kind of had to settle for this one. I saw the market push up, and I got distracted exactly at 9:30 Eastern and missed my perfect entry. Market came down, hesitated, crossed over, right? So we got a hesitation off demand, crossover, make a new low. Then the market reacted, came and swept this high. So I saw that as a hezzy crossover with the sweep of liquidity. So we decided to take some sales back down, call like a 1 to 3. And that's what I mean when I say the smartest thing you could do in these market conditions is to prioritize a lower time frame. Now, if you get a swing position that you're comfortable holding, by all means, hold it, run up that bag, right? But if you're not trying to capitalize on a lower time frame, it's just of my opinion that you are playing with fire because again, something like like the markets are being moved by headlines right now. It's not even being moved by real proof, real data. It is really being moved by headlines. So the fact that the market can make new all-time highs on something that Iran can come out and say is not true, just that of a push of a button. And this is why we see this huge gap down when the market opened today. Now, as the market opened, I did take some buys. I'm currently in profit on the buys. Because when I see an impulse like this, I usually look for this, to get ate up pretty quick. All right. Now, if that does happen, what do I see happening after that? Again, just looking at this from a technical perspective, I do see a potential for strong high hezzy crossover setup here. All right, so we do have a high that we took out. Market gives me an impulsive candlestick here, which I call my bearish footprint, or it's a fair value gap. Imbalance. There's a lot of names for it. Reason I call it a footprint is because it's big and it can't hide itself. It's like if Bigfoot is walking through the snow and you just see a big ass footprint right here, you know that something human did not leave that footprint behind, right? And when we're looking for, opportunities to trade, you want to trade with large institutions, hedge funds, and the big banks like, there's lots of different names for these people, but most of the time you call them the big banks, the institutions, the hedge funds, the institutional traders, right? And the reason why I call it a footprint is because they leave behind a much bigger candle than the typical retail traders leave behind. So if you see the big candlesticks, you know where, okay, the big players are trading, all right? So with that being said, the fact that we got this push down, obviously it does look very attractive for a sale. However, when I take a look at these highs here, I do see the possibility for that to be a weak high. This could be a trap. All right. And by trap, I mean everybody sees the initial sell-off, which is huge. Make no mistake, right? And the market can indeed keep dropping. All right. However, best case scenario I'm seeing right here is if there's any chance that the market can get back up to this area here. All right, where we have internal range liquidity, where the market left its footprint, hesitated off of demand, and then crossed over bearish. The market got close to this area, but didn't quite hit it, right? So you see it got close, but it didn't quite hit it. So that means there could still be a little money left here. And typically when I see a huge gap like this, a huge, reaction, typically I do wait for the market to come and fill that area in before we get another move. Now, with that being said, this is driven by something other than just pure technicals. So again, if this doesn't happen, I'm not gonna be, super upset about that not happening because I do understand, we are in, times that are a little difficult in terms of, war and all this other type of stuff. But if we get this, guys, I'm telling you, that'll be a beautiful trade setup. Like I said, I took some jabs down here. So I'm already break even on most of these, and I'm just hoping that the market slowly works its way back up here. I'll take profit at these highs and get in position to take some sales around that 26,715 area. Obviously, check your broker. It might be a different, price point, just slightly, just depending on the brokers that you use. All right. So let's just keep it pushing. Oil, all right? Oil, not oil, sorry, but gold. My apologies. Gold has been moving a lot differently than, where you typically accustomed to it moving. Usually when there's bad news, gold goes up. But I do feel like just with gold being so overinflated over the years, it's actually, to a degree moving on its own accord, right? Nowadays it's like good news makes gold go up while bad news pushes it back down, right? But like I said, 2 years ago, that would actually be the opposite, right? So again, you gotta be careful with what you do, and it's not just as simple as, oh, there's bad news, buy gold. Now I think we saw that when this war first started. I remember it like it was yesterday. I remember all the memes and stuff. People was on Instagram talking about, man, the moment the market open, I'm gonna buy. I'm buying. I'm buying. Who buying? Who buying gold? Who buying gold? And that was, if I'm not mistaken, that was here, right? Yep. So I remember Sunday was March 1st. This was when the war started, right? And you see what happened immediately after that. And I don't think anybody was probably able to predict this at the start of a war, right? Like everybody was bullish on gold when the first bombs started dropping. And this was the reaction with gold of all things, right? So again, this is why I say lower time frame trading is going to be your friend until we really start to figure out what's going on with these markets on a macro scale. I'm not swing trading right now. I've never been a big swing trader, but I don't mind holding a position if I need to. But now I'm really looking to be in and out within the session. If I could be in and out of a trade within an hour, I'm happy with that. All right. So what we see here is obviously the market came and cleared, Asia session highs from a few days before gave a huge reaction here. What I would personally be looking for is this zone down here still hasn't been, retouched. All right. So when we look down here, all right, we see the market impulsed up. It does make some higher lows here, and then it crosses over once again. So I do see the potential for there being internal liquidity resting underneath this low. All right, has remnants of a hezzy crossover pattern, not the cleanest one in the world. However, you got to look at it as a principle, not an absolute. So if I look at this from the principal perspective, right? I see the market reacting off of previous supply, right? Now, why is it supply? Supply is really any high that leads to a new low. So I see the market come up into this area, reacts here, makes a no, reacts here, makes the same low, but there's still a little footprint left underneath the hesitation. So here we got the hesitation, we got the crossover. And we still got internal liquidity resting here with a bullish footprint right there. All right. So when I see that, I think the market will be actually attracted down to this region. And then once we get to like 4,700 or so, I think that's where we could start looking for some more long opportunities on gold. That's where I would be looking. All right. So keep your eyes on that, y'all. Again, looking for NASDAQ to continue up just a little bit, and then I'll see that drop continuing. All right. Again, I think it's going to be a lot of fireworks this week. All right. There's a lot going on just in terms of, I mean, it's a lot of news. It's almost hard to even keep track of all of it, if I'm being completely honest. Um, I mean, China is they dumped almost $1 trillion of U.S. Treasury holdings, right? Now that's insane, right? Historical dump. Obviously not good for the markets, all right? So again, this is important because a lot of countries are holding, U.S. dollars and U.S. Treasury dollars, and when they start letting go of the dollar, it's like that there's big problems there. Here we got lots of insiders. You could track people's trades, track their wallets, track all types of things. And a lot of people are selling in the markets right now, right? A lot of the biggest players are dumping their trades on everything except oil. All right. Everything except oil is being sold off. And last but not least, here, just in the last 48 hours, the Strait of Hormuz has been closed. U.S. claims peace talks will resume, but Iran has backed out of peace talks because they say the United States are doing bad business. They're trying to set them up, which is believable. I mean, the same thing happened in Libya. They tell you can't have nukes, and the moment they try to negotiate with you, they kill you. So, we've been known to do bad business, and I guess Iran just ain't going for it no more. Again, they've been accused of plotting a surprise attack. U.S. has struck and seized Iranian vessels in the Strait. Iran has denied Trump's claim of giving up uranium enrichment, so they're not giving up their uranium, which they shouldn't. Every country in the region that has done that has been bombed to pieces shortly thereafter. But again, this is not. I'm not here to pick sides and all of that. But long story short, America is definitely doing bad business. Now, with that being said, this doesn't look like a de-escalation. All of this looks like causes to escalate, and Trump actually put out another tweet or post on Truth Social saying that if they don't agree to peace, they're bombing all the power plants and bridges. So, we back to war crime time. Now, with that being said, again, all of this progress that has been made on the stock market, this can be wiped out this week, truth being told. I wouldn't be surprised to see huge bearishness. All of this has been hyperinflated price action based off of headlines that are now starting to fall to pieces. So again, this isn't driven off of the economy. This isn't driven off of, anything like that. This is all driven off of Trump saying, "Hey, we got a deal." And now that that is not looking like it's gonna remain, you definitely got to keep your eyes open for those gains to possibly be erased. All right. So let's take a quick look at some of these currencies. Volatile to say the least. So far as GBP USD is concerned, um, I would look for further downside. All right. Now again, it's just playing that game of trying to catch a decent retracement in order to be able to capitalize on a real move, right? I'll never be the guy that tells y'all to sell low or sell down here. Like we gotta see it retrace some, right? Even if we are able to get into this region or even a little higher, maybe I entertain that, but more than likely, I'm gonna need this to retrace a good portion of this downward push, all right? And then hopefully we can find some opportunities there. Same thing here with Euro USD. All right, so market made a weak high, came and took it out. Big dump there. All right, again, the best case scenario is us getting up here where we can get a realistic sell, right? Because it's all about, when you understand premiums and discounts, when you're taking a trade, a sell especially, you want to sell above 50%. You want to buy below 50%. So realistically, I would love for this trade to come at least up into this region up here, because if it does that, we see lower time frame hezzies that can be cleared out. All right. Not so much on the 5 minute. Kind of got to go to the 30 minute or the 1 hour or so to really see it. But I feel a little more comfortable selling up in this region just above this little indecision candle right here versus selling lower in this range, right? So again, if we could retrace a lot further, that would be a better situation for everybody. All right. Now, I'm gonna do a quick run through of just some of these other currencies, and then we'll go ahead and wrap it up. All right. So Euro JPY wanted to sell a little earlier in the week. Didn't get that one. All right. This was Wednesday. the 8th. So yeah, that was actually week before. All right, that's the week before. Last week it was just a lot of consolidation. All right. Not a lot going on. Go ahead, clean these charts up real quick. All right. So this does look like a typical option B setup. All right. Option B is when the lower high setup fails. So the market gives you a new high and then reverses, right? So the reason I had this is because again, every trade is not going, hit on the first attempt, right? Sometimes you've got to explore different options, right? So if the option A trade fails, then you need to flip your thinking to possibly get this option B set up. Option B is when you take the trade here but the initial sale fails. So you wait for the market to clear out all the noise to the left, and then you could possibly get that drop. All right. So I feel like that's what happened here, right? Here you didn't get the sale from the lower high point. Now that the market has cleared out all the noise to the left, now this could really be the area that you get the sale that we were looking for all along, right? So now that, you come down to, let's say, the 15-minute, seeing things a little more clearly here. All right. Market ranges here, clears out the high, then works its way down. As it's working its way down, you get another small hesitation, then a crossover. So this can definitely be looked at as a hezzy crossover, right? So now we just go through the steps. You see the strong high here, you see the hezzy, see the crossover, right? So this is strong high, hezzy, crossover. So with that, next place that I would be looking to sell is right there above that hezzy, right? So let this market retrace. Once we get up into this region here, I'd be looking for a sell on Euro JPY at about 187.55. 187.55 and above. That should be pretty valid. All right. So you probably risk like 20 pips there and go for about 130. All right. I see that being pretty solid trade setup on Euro JPY. All right. Euro NZD, I don't really trade that. Euro AUD, not seeing much. Okay, we're not pushing into an interesting area, and I don't really see anything telling me it's a sale right now. So I'd have to wait for that to create a little more price action, give me something else to go off of. We already talked about Euro USD briefly. Um, Euro CHF. I was looking for the sale. I just want the market to go a little higher. Unfortunately, didn't get that. So now I'm not really trading this at the moment. I wanted this sell. Market dropped a little early. So yeah, not really on that right now. And Euro CAD, that dropped like I expected it to from this supply zone. So now you gotta just kind of wait for the next setup on this too. But this was a nice hezzy crossover too though. All right. Like I don't like talking too much about old setups, but this is something good that people can learn from. You know what I mean? You see the strong high, the market hesitates here, crosses over, got a larger time frame hesitation, larger time frame hezzy crossover. You see the weak lows here. So this still has a long way to go. Until these equal lows get taken, this will probably remain bearish, all right? So just with that information, even though the initial move already happened, or the initial reaction already happened, until that target goes, until the lows go, realistically you could keep selling and keep looking for sell opportunities until those lows get taken out. All right. So just looking at this, for example, It's like you got highs here, highs here, highs here. The market came and knocked those out. All right. So you got a strong high formation of some degree right here. You got some weak highs right there. I would see if the market can retrace up into this region, like 161.5, 1.615, and see if it can react from in there. All right. Again, not the best setup I ever seen, but if I had to just look at it, I'd say these highs, market pushed down, retraced here. This probably even a better one here, 6149, right? So I probably look at this area. It looks a little better on the 5 minute, all right? Because again, that's where the last place you got like a footprint, right? So you see the big bullish candle, big bearish candle. The rest of these candles are little. You see that? All the other candles are real small, but this one is big. So that tells you that somebody is responsible for this particular candlestick. Somebody with a little more money, a little more purchasing power. These probably somebody you want to be trading with and not against. So when you see something like this, big bullish candle, big bearish candle, you got to understand that, okay, that could be the hezzy here. This could be the crossover. So strong high, hezzy crossover. We wait for this little candle right there to get cleared out. And that could be the point of internal range liquidity, all right? So that's what I would be looking for right there, all right? So far as Euro CAD goes, Euro GBP, I don't really trade, to be honest. But let's see. See if there's anything there. Nah, I don't see nothing there worth trading. Let's go through a few more of these currencies and then we'll go ahead and wrap it up, all right? Like I said, we ain't gonna be too long today. All right, ain't gonna be too long today. So weather in Houston been crazy. I got a crazy sinus headache. So I'm gonna get up out of here shortly, probably in like another 10 minutes or so. All right. GA. It's another, I missed on this one here. But now seeing where the market's going, I can see it definitely pushing more towards those lows. But again, it's just waiting to see a good sell opportunity. All right. Waiting to see a good sell opportunity. Again, if I don't see a strong high, if I don't see a clear hezzy crossover, I'm just not going to take the trade. So when I'm clicking through these pairs, that's really all I'm looking for, right? Okay, do I see a strong high or strong low? Do I see a hezzy crossover? If not, you just go on to the next pair, all right? Now you just go on to the next pair, all right? I didn't take that, by the way. I seen this signal go out and I was trying to mark it up to see if I saw what they saw. But somebody probably looking like, damn, that's a terrible trade. But so far as GJ, similar thing here is Euro JPY. So on GJ, I was also in the market for some sales from this supply zone, right? And we got a couple reactions, right? So we did get a reaction here, got another reaction here. Definitely could make some money off of a reaction like that. Make no mistake. But seeing how the market just reversed, all right, and then cleared out all the highs to the left, now it's like, okay, is this the real drop? All right. Is this the real drop? That's the question. So doesn't look as clean to me as something like Euro JPY. If I had to choose one, I'd probably choose Euro JPY because if I lost on it, I could still be okay with that outcome based on the technical reasons for the trade, right? Like it just looks like a better setup to me. than GJ. If I lost on GJ, I wouldn't be as surprised. So that's where the trades I try to take. Like I'm never surprised by a loss because they happen, but at the same time, I don't want to, take a loss and I gambled with my confirmations, right? Like if the confirmations are there and you lose, it's just one of them days, it's just something that, it has to happen. And that's one thing I want y'all to realize as traders, sometimes we're chasing something that is impossible to find, which is a perfect win rate, right? Like nobody wants to ever lose. Everybody is studying to avoid losing versus studying to make money, right? So that question you gotta ask yourself is, do you want to, be perfect or do you want to make profit? Or do you want to, never lose, or are you okay with losing if you still are able to withdraw every week, every 2 weeks or whenever your withdrawal schedule is? And that's the question you got to ask yourself, right? Sometimes we get real hard on ourselves for taking a loss, not realizing like, yo, you could lose a trade and still withdraw this week. So once you just kind of change your outlook on the way that you look at things, that's where a lot of the growth takes place. And you start to cross over into that realm of being a professional trader, versus somebody that just um, is just, taking setups and trying and chasing perfection with their setups that they take. So just keep that in mind, man. Like y'all are good. You win some, you lose some, as long as the outcome is income. So just keep that in mind. Um, USD CHF, nothing there, honestly. UJ, nothing here either. I seen that reaction or that re-entry here, but I don't know how much I trust that Hezi crossover. Um, I would look at this as a potential for a supply zone, but it's just shooting up a little too fast for me. That's the difference between something like that and even this one. Like the market, it slows down, it ranges a little bit before it pushes up into the hezi up here. Same thing over here. It's like market slows down a bit, ranges before it hits the hezi. This is just shooting up in a straight line. I don't really want to sell that, even if we come and clean out that hezi. That's still kind of dangerous in my opinion. So, it's not a lot of opportunities just fresh off the market open. Um, I would give a lot of these pairs some time to decide what they really want to do. All right. Again, I am expecting bearishness on NAS and other indices this week. So just keep your eyes open for that. I'm looking for the market to slowly rebound from this, big gap that the market opened with. But yeah, keep your eyes open. I feel like if we can hit this, especially for New York session, I'd be looking for a big sell-off. All right. Big sell-off. I think there's gonna be a lot of negative data coming out tomorrow. And data or no data, it's just the simple fact that the conflicts that's happening across the world. And again, uncertainty is not good for the markets. So keep your eyes on short opportunities this week for NASDAQ. Expect gold. To come down to this 4,700 area, and I'll be looking for a reaction out of 4,700 for gold. Look for oil to keep pumping. All right. Looking for oil to keep pumping. We had a nice little relief period last week, but it doesn't look like it's going to be a long-term thing. So again, market kind of topped out around 120, got back up to 117, then it started dropping. So now, with the new developments, again, let's just go with the flow, right? New developments, oil gonna be bullish until something else happens, all right? Um, Bitcoin, all right? Bitcoin, like I said here, I showed y'all this every time, every time this has happened, all right? If there's a historic dump from China, has been followed by a 21% dump in Bitcoin, right? So keep your eyes on that, man. Keep your eyes on that. We already had like a pretty decent drop since Friday. Look for this to continue, right? I was never really fully sold on this floor anyway. All right, because these are pretty weak lows if you ask me. All right, so with that being said, I've always had one more push down. I'm looking for like mid 50s, 58, 56, somewhere down here. Get one more, correction followed by a put bearish push. And then maybe we can start reacting from down there. But I do still have one more bearish push. I sold most of my Bitcoin at or just above 100K. So I was able to save some money on this drip, but so I wish I would have sold a little more up there because I was all in all last year, man. I thought we would have been at 180 by now. I ain't gonna lie. I was one of them overly optimistic people. But now that, we are truly in this bear cycle, I wouldn't get too anxious just yet. It's definitely some decent gains, but I think we got one more drop in us, one more good one too. All right. So again, this week should be interesting, fam. Be diligent, be careful, be strategical where you risk your money. I say it once and I say it again. Lower time frame will be your friend. All right. If you can catch a swing, God bless you. But I wouldn't be banking on that being my primary profitability strategy right now. All right. Again, there's too much back and forth. There's too many questions on transparency and honesty on what's going on across the world. So if I was you, I'd get in and get out. This is why I like to make my money within an hour or two per day. I'm trading realistically from 9:30 Eastern to about 11:30 Eastern, right? And that's if I'm not in the trade early in the session. Like if I gotta wait 30 minutes to an hour to take a trade, I'm still typically done by 11:30 or so. But there's times where I could be done trading in 30 minutes to an hour if I'm taking the trade closer to the open or closer to that 9:30 open. So, just keep that in mind, man. Like at the end of the day, it's all about risk to reward. You're not gonna make no more money catching 1,000 points than you will catching 100 if you risking accordingly and if you using your the same risk per trade. It's the same thing. So a lot of times people think scalping is a dangerous form of trading. They think it's gambling or whatever. But at the end of the day, if you're using your risk to reward and you're using risk management accordingly, it don't matter if you're on the 1 minute or the 1 day chart. You can still make the same amount of money, and the only difference is you're gonna make it a lot quicker, so there's a lot less stress and decision making on your shoulders. Because, like, look, type of one in the chat if you can relate to this. If you've been in a trade for hours and hours, if not days, and you every day, every hour, you questioning whether or not you should close the trade, did you hold the trade? You was up 1,000, you kept holding, now you down, now you only up 100 or 200, and now it's like, damn. I was just up 1,000. Now I'm up 200. Should I just take the 200 and go, or should I wait for the see if I can get 1,000 again? And next time the market go to 1,000, I'm gonna close. I promise God, I'm gonna close. Then you close the trade, and then the shit keep going, and then you could have made 2,000, and now you beating yourself up behind that. Bro, you don't have none of them issues if you just take advantage of the lower time frame. I'm telling you. Like, trust me when I tell y'all, bro. If you catch your swings, catch your swings. But I partial out at 1 to 3, and I partial out again at 1 to 10 risk to reward ratio. And when I'm on these lower time frames doing my 1 minute entry methods, I could typically partial out within a matter of minutes, right? Like I could partial out. There's been times I didn't hit my target in 3 minutes. There's been times that it took me 20, 30 minutes, but it's just the fact of the matter that it's quicker than most, other techniques, right? So that's just my opinion. I obviously do whatever you feel like works for you. But again, I mean, I showed y'all my deposit history and withdrawal history last week. And that is the reason I'm able to do that because I only focus on risk to reward. That's why I can put 200 in the broker and not have to deposit no more. Right. And that's what I kind of want y'all to experience. I feel like that's a more realistic form of trading, right? There's a lot of people out here, they make a lot of money in a lot of different ways and they'll show you the profit, but at the end of the day, if you don't have the bankroll, you don't have the cash flow that they have, it's going to be hard to duplicate that. So the way that I trade is going to allow you to duplicate it because anybody on this call should be able to throw 250 in a broker. And the fact that I could show you 250 deposit with $50,000 worth of withdrawals, that should let you know what's possible on a small balance, right? I'm not one of them dudes where you gotta put in five, $10,000 just to make some good money. You know what I'm saying? So if you trust the risk to reward, it's a numbers game, bro. Trust me, the numbers do not lie. A lot of things lie, but numbers do not lie. If you just trust the mathematics and you understand, if I'm taking 1 to 5 risk to reward trades, all I need to do is be right 20% of the time, and I'm gonna make money. And if you believe that in your heart, then you're not gonna be stressed out about a loss. You're not gonna be stressed out about a win or a loss. Like I'm just pushing the button when I see an opportunity present itself and I'm living with the outcome because I know even if I lose, I gotta be right eventually. Especially if I'm analyzing the right way. You ain't gonna be right 100% of the time, but if you could be right 40, 50% of the time, you're gonna make more than enough. You know what I mean? More than enough. So that's my style of trading, that's my philosophy. And again, I feel like if you chasing perfection, you're gonna be chasing something that don't exist. All right. So tweak your strategy to be able to handle some losses, be able to handle the human elements of trading, to be able to handle the human psychology of trading. And if you could do that, you're gonna be all right. All right. You're gonna be all right. But with that being said, again, be safe out here in these markets this week, man. Keep your ears open, your eyes open. Make sure you checking these media outlets and stuff because again, a simple tweak can change the whole markets. But yeah, other than that, like I said, man, be safe and y'all have a phenomenal trading week. In the markets. All right. So I appreciate y'all for tuning in. Again, if y'all in the Trade Star chat, y'all got another call coming up. I just wanted to knock this out real quick. If you're in Trade Genius, I'll see y'all on New York session this week. Recording will be dropped here momentarily. I'm gonna knock it out right now. So keep your eyes on my YouTube if you guys want to rewatch this. All right. Appreciate y'all again. And last thing, if you guys don't follow me already, please give your boy a follow. I'm trying to post more, man. I'm posting more content. I'm coming up out of the shadows a little bit. So, if you guys got value from this call, feel free to give me a follow here at Wallstreet_Ray on Instagram. Let me know you was on the call and I'll give you a follow back. All right. Much love, y'all. Peace.